fund means. There's blurred line. As a whole, in general, we call it fund, but there is some criticism on crypto VCs or funds that it's not really VCs, but it's probably hedge fund with branding of VC. How do you identify yourself? VC fund?
So usually I like to put it as like open-ended fund or a closed-ended fund. So for example, if you're dealing with tokens and you're investing into digital asset, a lot of times that is open-ended fund, which is more like a hedge fund. If you're dealing with mostly equity, then a lot of times it's VC.
So for us, so fund kind of encompasses both venture capital fund and hedge funds, right? So for us, it depends on kind of the time horizon that you're looking at. So Fanbushi, we're a long-only fund where we have a 10-year horizon, so we position ourselves as a venture capital fund. There's kind of a lot of blurry lines in there, and sort of some people have shorter horizons, still call themselves VCs. Some people sort of also have hedge funds, but hold on longer than usual. So it's not as clear cut, but for us, I think we're pretty clear what we see.
For Kinetic, we started off investing both in tokens and equity, so we didn't actually start off with any specific vehicle. We were just kind of doing our own thing. 2017 to 18, we did have a token vehicle, but technically it wasn't a fund because it wasn't regulated. It was just something that we were doing internally with mostly, partner money and a little bit else. But recently we're launching a VC to invest in equity. So I think the moral of the story is that the whole community and experience of crypto and blockchains has opened up a lot of different ways to kind of slice, and actually a lot of the old kind of words don't even apply anymore. Like you said, the concepts are blurring, and the whole kind of nature of the asset class, both from crypto to equity of blockchain companies to STOs, is requiring that we actually reconsider the whole model, and I think that's kind of the beauty of it. So I think that the nomenclature it's interesting, but it itself as labels are kind of like starting to become a little bit obsolete. We'll have to potentially find new ways to describe ourselves, which can be as flexible and dynamic as our activities.
Right. I mean, we're all being innovative here with blockchain and this fourth generation of innovation. That brings me to the question. So, Jihan said you guys invest in both equities and tokens. So, are you guys all portfolio investing in both tokens and equities? Is that the position you guys are taking?
For Sora Ventures, we're very clear, 20% equity and 80% tokens. We're actually an open-ended fund, and to really define what a fund is, it should have a fund custodian, a fund administrator, and a fund auditor. Usually this is quite rare. Like, it's quite rare for Asia to see crypto funds to have these three third parties, but it's actually quite important because that's how investors are protected.
At Fanbushi, we actually manage several different vehicles. So our first one, the original Fanbushi Capital, we're actually the first venture capital in Asia to focus on blockchain. So at that time, there weren't ICOs, so there weren't a lot of different crypto assets to invest in. So we actually structured the first fund as an equity-only fund. Subsequently, we also raised a couple of token-only vehicles, and we also have one more vehicle that does a mix of equity and tokens. And I think that going forward, it's quite important to kind of have this flexibility, as Jehan mentioned. A lot of the lines are blurring, so it's not equity versus tokens, it's not utility versus security tokens, there's kind of a gradient over there. So I think that going forward, as the industry continues to change, it demands a kind of flexibility to what we can invest in, especially with a long horizon, so that we can adapt as the industry changes so fast year by year.
I think it's important to note as well, because although we call ourselves like funds or VCs, what we actually do is much more than that. And I know from my friends and colleagues here, we're not just investing, right? We're actually taking very activist positions to try and help build and help guide the founders, help to try to help create partnerships and help create opportunities and help them refine their business models. Previously, we actually had like an advisory function that we created because we were already doing so much on the investment side to try and help these startups and help these founders, that it made sense to actually have a focused group of people doing that, and then of course charge money for it. But I think that as we kind of develop, and even looking at like what Andrew's saying, like the new news that they're converting all of they're not even going to be a VC anymore. They're going to be financial advisors. That's actually a warning shot for all of us, that where our space goes is going to be something more towards the financial services and financial advisory from a regulatory standpoint, even if what we end up doing is still the same, supporting founders and investing. So it's all being blurred, not just in the crypto side and the blockchain side, but also the traditional side. So it's all quite an exciting time right now.
I'm very happy to hear your answer, Jan. This industry, I actually personally believe in it. But last year when we were at this forums, if we asked the investors what kind of project would you invest, especially the tokens, a lot of them would say reverse ICOs, corporate ICOs, that actually have some kind of tangible businesses ready. But when we're talking about these VC funds, we cannot just focus on businesses that already exist. There are some creative ideas. Maybe that's where we can also actually make 10x effect, right? So having the financial advisory function, having them to grow, looking at the long-term growth, I think that really matters for the investors too, right? And I know there are many projects in the attendance list as well. What kind of projects are you looking into? Is there specific industries or sectors?
So for us, we're about 1/3 gaming and entertainment. We have 20% equity, so a lot of that could be more long-term, 80% token, which means that's a lot short-term. Depending on your fund, how you structure your fund, a lot of open-ended funds usually have a lockup period for like a year to 2 years. Usually during the earlier of kind of the fund, they will deploy more on tokens because you're investing into US tokens, you're invested for at least a year. Later stages of the fund, they're probably reluctant to invest in tokens. That means that they're going to be invested longer than they should. So it really depends on what the timing is. So obviously, earlier last year, we had a lot of deployment, and this year we're slowing down, not because of capital, but because over time, investors need to redeem. And again, the majority of the funds in Asia, I think majority of that capital is coming from themselves. For us, we're 90% LP money. So then we have to respect the fact that investors will eventually redeem or possibly redeem. And for that reason, we need to have bullet in our wallet.
For us, we've been fortunate to have LPs who kind of share our long-term vision because, again, when we started in 2015, even now, there's not a lot of clarity as to sort of what will be the killer app or what will be the breakthrough in blockchain and crypto. I think that a lot of it is still up for debate, but even more so 4 years ago. So, we came in this consciously knowing that, okay, we know this is going to be big, we don't know where it will be big from, so we established our investment thesis to invest very diversely across all different verticals, across different layers from protocol layer all the way up to application layer and so forth. So, to date, over the 4 vehicles, we've invested in over 120 projects, everything from healthcare, financial services, education. Something us more lately is that it's sort of what we call supporting infrastructure. So infrastructure not in the sense of like protocols, but infrastructure in the sense of what are the key unsexy things in the industry that are missing to drive adoption. Things like key management, things like custody solutions, things that sort of help people. Like there's a lot of cool apps and cool ideas out there, but there's still some very basic UX elements that still need improvement before we can get to that mass adoption. So that's what's been interesting to us lately.
Yeah, for us, I think that 2016, 2017, and some of 2018 was really investing in a number of mostly token projects, and that really was relatively opportunistic in terms of the types of teams and opportunities that came up. I would say we probably did over 100 projects during that time, mostly pre-sale ICO, some equity. But looking forward, I think we have a slightly different type of approach. Of course, now we're mostly doing equity in the next fund. And our focus is slightly later stage. So we're going to be doing less pre-seed and seed deals and more A rounds. And the reason for that is because we think that a lot of the value, and not all of value, so I'm not giving up on tokens, but at least a lot of the value in the next wave will accrue in the equity itself. And I think that's just a function of where the token market is at the moment and where the opportunities will be. So with that in mind, we're actually looking for companies that are more in their A rounds and who have really kind of established product market fit and have some traction and ideally have revenue. So it's less about, well, it's this vertical or that vertical. We're relatively open. Although to be fair, we probably did a lot of the kind of protocol infrastructure stuff in the first 100 deals. But now I think that we're still relatively open to what it can be. We're very interested in the whole STO stack. So for example, we invested in a company called SharesPost, who's here somewhere, because they are a licensed, an SEC licensed exchange for secondary tokens. So I'm not necessarily interested in investing in STOs themselves, but I am interested in the platforms that will underpin the rise of the STO industry. The last panel was talking about how there's maybe too much STO hype, and I agree with that. But I also think that STOs are not a wave, it's really the ocean underneath where the entire capital market will become digital. And that's really what we're talking about, whether we're calling them STOs or digital assets or just capital markets 2.0.
That's cool. So that brings a question. If there were some successful exits that you guys have made in the past year, what would that be?
For us, our biggest one is definitely Mithro, because it got listed on Binance, OKEX. It was actually extremely hot in Korea. At the peak, our AUM was like 150 million USD. So it was a huge success. And majority of our projects, to be honest, a lot of the tokens are actually vested for a year long because they have to comply with US SEC. But we are seeing a huge interest in recent IEO, and a lot of these projects are working with changes in Asia to potentially do an IEO. And I think for that would be pretty profitable for us.
What do you guys think about IEO? Do you think that's a valid way of fundraising today? A lot of products are actually looking into that instead of ICO.
I think that sort of the success of the recent wave of IEOs shows that there's a certain level of pent-up demand still from sort of retail investors to look for exciting projects. I mean, ICO market has been dead for a year plus, and so a lot of these IEOs have been very carefully timed and very carefully limited in sort of their scale in order to show that there's demand. But at the same time, once there's a saturation of these IEOs, sort of the limit of that demand will actually begin to show as well. I think that this kind of points to, I guess going back to
Successful.
yeah, no, ICOs or token funding or equity or things like that. I think that there will always be kind of a demand from the retail side for some of these exciting projects and sort of a certain risk appetite that can handle some of this risk associated with it. The question is kind of the size, and right now what IEOs are showing us is that there's good demand at low levels, and it may take some time before sort of that overall demand can continue to increase back to, say, 2017 levels.
Yeah, I think IEOs are kind of fascinating, and beyond the actual performance of these standout BitTorrents and fetches, etc. What's interesting about the IEO kind of phenomenon is that it really shows how nimble and how innovative our industry is in terms of trying to create different products or strategies to aggregate interest and concentrate it in a way where there's market performance. I think that's the right way to say it, right? I'm not making a judgment about it, I'm just observing. That said, I think that it's unsustainable at these levels, right? There's no way you can have 5 IEOs per exchange. Now, when so many exchanges are starting to launch their own IEOs, there's simply not enough capital in the market. So it's nice that there's this kind of innovation or this kind of participation, but I think what's really needed is, the end of the road. We need to fix the problem of utility and adoption and fundamental value of the actual tokens that are being traded, so that we don't have to keep coming up with clever ways to get people to buy the same old tokens.
Right. We're having this new paradigm shift in the market, different way of funding. And sorry, as a moderator, I was asking the question about your successful exit, and it shifted on to IEO. Let's get back to successful exit.
At Fembusher, we were quite lucky. On the equity side, we were able to have two early stage exits, which is sort of for the first 3 years of early stage, seed stage kind of VC. That's actually quite positive signal. So Blockseer data analytics company was acquired by DMG Blockchain out of Canada, and Paradox, which was a subsidiary of Upland Partners, was acquired by Coinbase last year. So that's on the equity side. I think that typically the exit timing for seed stage investments tends to be further down the road. So we're hoping to see more exits going forward. On the token side, I mean, we've had a lot of assets that were listed successfully that are trading in the public market. At the same time, even though we do institutionally invest in tokens, we continue to hold on to them because we continue to have kind of this long-term strategic relationship with our portfolio companies. So I wouldn't call that an exit, even though the tokens are listed and we could sell if we wanted to.
Yeah, I think it's an important distinction. For us, we haven't really had any exits on the equity side because it wasn't really necessarily what we were focused on, so we haven't done so many equity investments. On the token side, yeah, the concept of an exit is, it demands a little bit of kind of nuance when you're understanding it, because just because even if you exit your entire position, I think part of the idea is you can find re-entry points, right? So it depends on what type of fund you are, whether you have the mandate to go in and out, what your relationship with the project is. And so I think that, you can't really call them exits, because there are definitely positions that we've sold 100% that we would absolutely go back into if they had the right kind of price level, or there was the right level of development or adoption. And so that's kind of the beautiful thing about tokens themselves, is that they leave themselves open to continual engagement in a way that obviously shares have a slightly harder kind of way of doing so, our private shares. So I think that for us, I mean, obviously we've, like these guys have participated in many listed projects that have done, 5, 10, 100, 1,000x, right? We've all got them in our portfolios. But I think what's really important is how you think about the ongoing relationship. There are absolutely projects that we have sold 100% of our tokens that we still maintain great relationships with, that we still drive business partnerships for, and that we still keep in touch with, because you don't know what's going to come next. And we think that as a project, the reason why we invest in them is because they have something innovative and they have something really valuable, and we want to continue monitoring and look for the right re-entry point.
And I think that ties back to Jihan's point earlier as well. And that sort of, in this industry, it's not as clear cut what exactly is a VC, what exactly is a hedge fund. A lot of times, it's very fluid, and you're sort of, I mean, when you're talking about traditional VCs, an exit is an exit because once you IPO as a public equity, it's not within the VC's mandate to hold it anymore, so no matter what, they're going to sell it. But sort of in the crypto world, there's this kind of ongoing fluid definition of it, because even if a token is listed, it doesn't mean that the project is mature yet. They're still at an early stage, they're still building a product, they're still pushing for adoption, so they're still going to continue to need the kind of care that sort of traditional early stage VCs give to kind of work with the project to help them build. So that's why it's not very clear what's the right terminology.
That's always an issue in this cryptocurrency too, like compliance, governance, and in investing in tokens, as investors, probably it's preferable to not have any lockup period. But how is it like? Do you guys actually have lockups when you invest in tokens? What's the user terms that you guys have?
It depends on the timing, of course. If you're talking about 2 years ago, then yeah, ideally the appetite would be relatively shorter lockup. But again, it depends on the project. If you're working with a US project, it's very likely you'll be invested for over a year, whether you like it or not. And we even invested in projects whereby, from our perspective, let's say we invested last year or February, we got it this year February. We got the tokens of this year February, but let's say they did another round in April, then we would have to wait for at least a minimum of a year, which is this year's April, to get listed. All due to US compliance. And obviously, if you're doing Asian deals, then we could get a token listed in less than 3 months.
Remington's microphone is not working.
Hello?
There you go.
Oh, there you go.
Hi. Well, lockups they're a negotiation process between the earlier that we are a long-term fund with a sort of a 10-year horizon, which means that lockups are probably a little bit like we're probably not as aggressive as some other funds in sort of pushing for shorter lockups. That said, I mean, as a fund manager, I am managing money on behalf of my LPs as well, which means that any risk mitigation that I can get. Even if I plan to hold on to the token long term, I also want to sort of minimize the risk that I'm exposed to it in case of something outside my control. So we will try to negotiate shorter lockups as well. But I mean, we've done everything from no lockup to 6 months to 2 years to everything in between. So it's really a negotiation process, project by project.
Yeah, Sam. I mean, we've had no lockups, and we've done projects where we're locked up for like 3 years, with a kind of annual unlock. So it just depends.
Right. And from the project's perspective, I believe that they feel that funds are not investing anymore. The market was bare, and recently we are expecting the market is turning bullish. For you guys to invest more aggressively, what do you think could be the signal for you guys? What trigger are you guys waiting for if they're excited?
Yeah, to be clear, so again, we're an open-ended fund, which means that we could be investing either in primary market or in secondary market. And to be clear, because we're end of the lockout, we're closing the end of the lockout, which naturally restrain us from investing into projects that have over a year lockout, which means that a lot of investment nowadays is actually in the secondary market. We just don't announce it. It's not an ICO project, but it could be a top 20 token, it could be a platform token, it could be things that, based on what our team, we do research. Based on our research, we understand that this potentially could be a profitable for us in the next 10 days or in the next 3 days. Then we purchase that, and then we basically have a long position. And we think it's going to be a bear position, then we short.
We haven't stopped investing, so any good projects out there, feel free to let us know.
That's great.
I think that the pace of it has definitely slowed down a bit for us, but even now we're still doing like maybe 1 or 2 projects a month or so. We mainly focus on primary markets, and I think that probably there are fewer headlines because we're doing a lot more sort of early stage, and projects tend to sort of go towards more conservative equity routes or sort of stealth mode and things like that. So it's a little bit more low profile, but we're still deploying. And I think in terms of signals, no, I think that's sort of the general mood of startups and entrepreneurs goes along with sort of market prices and capital availability. So as prices go up, people will see the opportunity to raise more. There will be sort of people who are holding on to crypto will have more deployable assets, so there will be more projects that pop up and more projects that get successfully funded. But I mean, if you look at sort of more traditional VCs, I mean, if you read CoinDesk or the blog or any of these news articles, you're still continuing to see sort of new deals pop up every couple of days or so. So I'd say that investment deal flow is still ongoing.
Yeah, same with us. I mean, we slowed down a little bit, but not really that much in terms of our pace of investments. We've shifted out to obviously equity, and so that is a slower pace of kind of investment than token. But we're still actively investing, closing deals. I think that the trigger that you asked for me is really around, again, it's cliche, but adoption, user numbers. And I think that the reason why I'm encouraged these days is that you're starting to see some of the projects who have really decent numbers. Instead of it being just a foregone conclusion that nobody has any users, you're starting to kind of hear stories, whispers about products that have, uses in the millions. So we invested in a project called Human Protocol, which is basically, it's like Google's reCAPTCHA, but it's their own system, which trains, machine learning. And they're getting really high numbers of actual users. Now the users don't necessarily know they're using blockchain in the background, but they are. And these types of non-obvious uses actually hitting the chain, that starts to kind of make us encouraged about like, oh, okay, there are vectors and there are avenues where actual traction, actual users are kind of engaging with blockchain. And that's the step to, I think, mass adoption. And of course, there's other external factors like, the whole Facebook thing, the whole Rakuten thing. All of those are helpful, right? But at the end of the day, I think the reason why those things are encouraging is because you just assume if Facebook is bringing in their audience, it's going to be in the tens, if not hundreds of millions of users, and we're just waiting for that to happen. So I think ultimately the trigger is just adoption of users.
Yes, definitely. Speaking of mass adoption and blockchain, I mean, we don't have to know how this iPad is made, from what kind of technology. For the users, they just need to use it without having, difficulties. That's what I see. When do you think that this liquidity and adoption and transparency in this blockchain industry, in crypto industry, will actually happen? Do you think it's quite near?
10-year horizon, then you can invest in projects that that could be running for 4 or 5 years, and a lot of that could be protocol investments. And protocol investments take a long time because you got to raise a lot of money, you got to build the ecosystem, build the technology. Assuming it's good, then you got to basically give incentives to developers to build on there. And then assuming the developers build a proper product, the developers need to work with a use case, an enterprise use case. So that procedure is highly risky, in my opinion, from an investment perspective, because there's too many things to go through a funnel. For us, we like to do reverse ICO, but even with reverse ICO, there are plenty, right? In Korea, there are companies, equity companies, Series A, Series B, that launches a protocol. For us, we like to work with equity companies that launch a digital asset as a strategy to help their equity company. So actually a good model for that would be, if you look at Binance, they start off with a centralized exchange, and then they launch a digital asset, and now they're working towards a decentralized exchange. So a very similar model. We start off with having an equity company that is already, Series C, Series D. They already have users, they have real volume, they have previous investors, and then from there on, we launch a digital asset. Usually, it's about 20 to 30% blockchain technology. And yes, it's not going to be as popular or as sexy compared to other protocols, but it works. And you can convert existing users and existing volume into crypto without actually users knowing it. And that's the beauty of it. I think over time, just like in Bitcoin, when first, the majority of Bitcoin miners, when they first started mining Bitcoin, they didn't know the use case of Bitcoin, they didn't know the value of Bitcoin until the first purchase of pizza came in. And then over time, it became more of a commodity like gold, right? And actually has real value. For a lot of these tokens that we invest in, same thing. They'll start off with introducing, from a UI perspective, they introduce a point system or like a credit to them. And this credit could be, over time, could be used to exchange for Bitcoin or for other cryptocurrency, and over time could be exchanged for cash and actually be used inside the app for a higher incentive. So usually start off by giving like a 10% discount or 20% discount, and people will actually start using it because it's cheaper, it's better than fiat. And from there on, then you can start to see a larger distribution of token holders. But this process is not going to come in from day one. It takes time, it takes education, it takes money invested into these products in order for it to work, in order for it to scale. And these are the projects we work with.
So adoption is already happening on a very small scale. We see live use cases of banks using blockchain for remittances. Portfolio companies are using blockchain to track diamonds. You could walk into a store in Hong Kong, Chow Tai Fook, and buy a diamond and scan a QR code, and you can see all the provenance data on blockchain. There are food tracking, there's supply chain tracking. There's sort of these small individual use cases that are coming live slowly but surely, sort of last year and this year. I think one of the kind of exciting things and one of the exciting inflection points this year will be kind of the launch of Cosmos, the upcoming launch of Polkadot, and sort of a lot of these chain interoperability protocols, because what we've seen over sort of the past couple of years is that every application wants to launch its own blockchain. Every sort of, there are dozens of different protocols, thousands of different dApps, and sort of each one of them believes that they have their own chain. We can debate all we want whether or not they need their own chain, but the fact is that once you have something that sort of enables seamless transition between all of these different chains, then it doesn't matter if they're running their own chain or they're all running on the same chain. To the end user, they have a user experience where I don't actually know what's going on in the background. I just know that my diamond being tracked can be connected to an insurance policy for my diamond, can be connected to me buying this diamond with BTC. So these are three different things happening on three different chains, but to the user, all they know is that it's happening seamlessly in the background. So we think that sort of, I mean, it's still in its infancy. Cosmos and Polkadot are still kind of just starting out, but we think that as this kind of technology matures, it will reduce the friction and sort of help drive faster adoption of these different kind of siloed dApps into sort of a more seamless ecosystem.
Yeah, I completely agree with all that. I think also that if I was more conservative, I would say, you know, mainstream adoption in 10 years. I think that's a, you know, very kind of safe bet. But the one thing that I, you know, always kind of go back on, well, there's two rules, I think, in blockchain and crypto. One is that price will always go up and down, and then back up, and then back down. So that's one truism. And the other truism, I think, is that everything tends to happen faster than we think. Everything seems to arrive much closer, like the first pension fund came in much closer. You know, the major, you know, JP Morgan, that was a surprise. So all of these things keep happening, like you kind of turn around and you're like, oh, wow, that happened already? The whole, there's a company in Hong Kong called New World Development, which is like one of the largest, if not the largest landholder, real estate development company in Hong Kong. They're doing blockchain-based purchasing for real estate. And that was just, oh, God, you guys are doing that now? So, and that's a stone's throw from tokenization. So everything seems to keep happening faster and faster, and it's like ice shelves. It's not a linear type of movement. When all of these things keep happening faster and faster, they create this kind of critical momentum where suddenly you're going to turn around and actually, you know, 50% of the things that you're doing are blockchain on the back end, which you really don't know, to Remington's point. So if I was conservative, I would say 10 years, but honestly, realistically, it will probably be much sooner than that, closer on the order of like 4 or 5 years, where there's a significant amount of your interactions, whether it's gaming or supply chain or payments or, you know, anything, because there's so many areas it can come from, which will be blockchain on the background. Not necessarily tokenized, but somehow touching the blockchain or using blockchain or distributed ledgers.
Good to know that we have positive prospects that we see in this blockchain industry. I think we have limited time, but for the last question, for the projects, when they approach you to get funding, how should they do it? What is the strategy? The floor. We don't have to take turns, by the way. Anyone?
So for us, it's very simple. Like you gotta have, if you're a token project, then you gotta really know your token economics. You even to be honest, it's like you really have to understand the question, which is if I'm an investor and I'm investing, why would I make money, right? And this is just the truth. It's like everyone we're investing because we want to make money. We gotta make money for our investors. So if you're telling me that because the product will come in 4 years, that's not really the answer. Realistically, is maybe you can show me some of the metrics in your community. How big is your community? If your product is running on beta, if there's any kind of KPIs you can show, anything that the database that would be attractive to show that hey, this is interest, or even in general, you've been reaching out to other investors and they've been getting feedback. Like these are all signs that you're making moves. You're really reaching out and you understand the community. These are the things that we look at.
Community, KPI, data. Anything else?
For us, show us what makes you special. Show us sort of why this is something only you can do that somebody else can't do. Tell us why sort of you have the ability to not just come up with this idea, because ideas are worth a dime a dozen, but you have the ability to execute it. Because one thing that I see is that a lot of startups, a lot of entrepreneurs, they feel that their idea is special. They feel that this is the most special thing in the world and the idea is worth everything. It's not. Show us, ideas can be copied, ideas can be replicated. Show us why you can do this. And I mean, everybody's been talking about adoption all day, and that's really one of the key things that we're missing. So show us why you can execute, show us why you can push for this to be adopted.
Yeah, so I think two quick things. One is that I think that if you are, like, I rely a lot on kind of validation these days. I trust people that I trust, and if you can somehow get a recommendation, like from one of these guys, then I would definitely look at it. But that's an important thing to understand. If you cold call me, I just don't have the time to spend on the 40 or 50 email, LinkedIn, random Telegram messages every day and sort through it. So if you're kind of like effective at understanding why my time is valuable to me, and being able to try and short circuit that like authentically by going through a social network, I think that shows both hustle and kind of awareness. And then the second thing that I would add to everything that these guys said, which I completely agree with, is that, to be honest, just work on your product, like work on your application, and I'll find you. Like, that's actually the best thing to do. Like, make it so good that I can't ignore you, and then I'm begging you to get into your round. That's actually really ideally what you should do.
Okay. Thank you for your insights.
Thank you.
And we'll see everyone tomorrow.